The average rate of return for October tends to be about 1%, but that 1% comes with an increased level of volatility. So you typically get some choppiness in the month of October. But the good news is that if October turns out to have any type of pullback, November tends to be exceptionally good. But here's what you need to know before the bell this morning. Markets did set. Let's talk about expectations and sentiment. Markets hit an all-time high yesterday. Just continuing to kind of run along this kind of 20-day moving average that continues to be very, very good support across the board. Every time we do have dips that come back to that 20-day moving average, that continues to find support, and then the markets kind of rally off that. And that's been a repeated process really ever since that April low. And we've just come down, we touched that and continue to rally, and that keeps the bulls in place at this point. And that kind of dynamic continues to play out right now. Volatility remains very compressed. And as we move into October, as we talked about yesterday, moving to the seasonally strong period of the year, you've now started to get a lot of tailwinds for the markets into year end. But we did, yesterday, hit that all-time high. Again, we're starting to see a little bit of rotation. We saw healthcare stocks actually outperforming a bit yesterday, which was very, very good. We haven't seen that in a while, but again, we're starting to see healthcare begin to pick up here a bit. And that's helping broaden out the market just a bit here, but it has been very much an AI chase at this point. Furthermore, markets continue to push back up into overbought conditions. Again, not surprising. So again, with markets kind of pushing up here, that will suggest that at some point you're going to get some type of short-term pullback. But any pullback here between now and year end should likely be bought just as a function of that we are in that seasonally strong trend of the year. Now, talking about October tends to have a higher volatility. It runs about 18 on average. We're currently trading around 15, 16. So again, October tends to have higher volatility. You tend to get some volatility, kind of looking back historically at the month of October. It's kind of a mixed bag. You have some positive Octobers, you have some negative Octobers. The average rate of return for October tends to be about 1%, but that 1% comes with an increased level of volatility. So you typically get some choppiness in the month of October. But the good news is that if October turns out to have any type of pullback, November tends to be exceptionally good. So again, just any pullback here that you get is going to provide an opportunity to get capital allocated to the markets for that kind of year-end push. Again, as we get into the last 2 months of the year, a couple of things to be paying attention to. There are some seasonal things that go on. If the market is doing very, very well in November, expect a pullback in the first couple of weeks of December. That's where mutual funds have to make all their annual distributions, capital gains, income, dividends, etc. And given the market performance this year, we could have some decent selling in that first couple of months as they distribute those capital gains from their portfolios and rebalance portfolios in December. So again, there's going to be a couple of opportunities this market may give you to get money allocated as we start that kind of year-end push to wrap up the year. Again, you have performance chasing to get into the year-end. We got year-end reporting, a lot of things. So a lot of pressure right now on hedge funds, professional managers in particular, to get allocations built up and participate. So again, just kind of pay attention to the markets here. Volatility remains low, as I said, but the trend is clearly bullish. Nothing to be overly concerned about at the moment. That's what you need to know before the bell this morning.